So next up, we have Rural Funds Group, ASX code RFF. And today from RFF, we welcome James Powell, General Manager of Investor Relations, Corporate Affairs and Sustainability. Rural Funds Group is Australia's first ASX-listed diversified agricultural real estate investment trust. James, welcome, and please take it away.
Thank you, Manny, and thank you to everyone on the line today and their interest in the Rural Funds Group, which I'll refer to now by its ASX ticker, RFF. Just to distinguish as well, the presentation on screen, you can see two logos, one for RFF and then one for Rural Funds Management. Rural Funds Management is the external manager of the property trust, and it's a specialist agricultural fund manager that has over 25 years of operating in Australia. I'll start on slide 3 of this afternoon's presentation to give you first a helicopter overview, if you will, of the portfolio that the Rural Funds Group owns. As Manny introduced, the Rural Funds Group, or RFF, is an agricultural property trust or real estate investment trust that are commonly referred to via their acronym of a REIT. A lot of the REITs that you may be familiar with lease out assets or property in sectors such as office or retail or logistics, but rather than leasing out buildings, we simply lease out farms. The group was first listed on the ASX in 2014, so it's approaching its 10-year anniversary of being listed. And we currently own 67 properties that are located mainly on the eastern seaboard of Australia, and the total value of those assets is just under $2 billion. When we invest in farms and seek to lease them out, we have some attributes that we look for in the sectors in which we own assets. One of those assets is agricultural industries in which Australia has a comparative or a competitive advantage. And so you'll see via the pie chart on the slide that the number of sectors in which we're invested is quite narrow. There's only 5 agricultural sectors in which the group is currently leasing assets, and 2 of those sectors, almonds and cattle, represent 2/3 of the portfolio by lease revenue. In terms of the map on the right-hand side of the slide, the different colours on the map of Australia represent different rainfall zones. And I use that chart really just to emphasise another key strategy which we deploy, which is investing in assets in different climatic zones or different rainfall zones. Rainfall is clearly one of the key determinants of the viability of an agricultural operation. And whilst the Rural Funds Group largely doesn't expose itself to agricultural operating risk, we also wanted to ensure that our lessees weren't all concentrated in one climatic zone, which may increase the risk for the overall group. Looking at the strategy now on the following slide, I'll elaborate a little bit more on the way not only in which we identify assets to acquire, but how we seek to value add those assets. The 2 pictures on the right-hand side of the page really demonstrates the 2 key strategies that Rural Funds Management is accessing with the aim of improving the value of those farms, as well as the income, the lease income that can be generated from those farms. So the first strategy is productivity improvement. And what you're looking at there, in case it isn't obvious, is a picture of a cattle property. If you cast your eye to the top half of the screen, you're looking in the background of that picture, and you'll notice that the shade of green is very different to the shade of green in the foreground. And so what you're seeing in the background of that image is a productivity improvement. That's actually a forage crop, which is irrigated, and you can just make out the pivot irrigation system as well. Essentially, what that particular productivity development seeks to achieve from an operator's perspective is it enables that farmer to not only stock more cattle on their property, but also increase the daily average weight gain that they may be able to achieve within their cattle herd. They're two key determinants for the profitability of a cattle property operator. And we seek to deploy those strategies so that it improves farmers' profitability, which should flow through to the value of the farm, and then also the rent that can be achieved on that particular asset. The other strategy which we use is a higher and better use development strategy, which people may be more familiar with in a more broader property context. In terms of farming, essentially what that is it's changing the commodity which can be produced on a given farm to produce a commodity which is more valuable, and again transforms the value of the property as well as the lease income that can be generated from that property. In the case of this particular image, what you're looking at is what was previously a cattle property west of Rockhampton. And what Rural Funds Management is doing is converting that to macadamia orchards. Cattle property is able to achieve, by virtue of the fundamentals within that particular commodity, a lower rent than a macadamia orchard. So we're able to achieve more rent off a macadamia orchard by virtue of that higher and better use strategy. I'll just now touch on some of the lessees on the next page of the deck who lease assets from the Rural Funds Group. So as I mentioned, $1.8 billion worth of farms across predominantly the eastern seaboard of Australia. And they are leased to some of Australia's largest agribusinesses. Almonds and cattle, as I touched on, are our two largest sectors by revenue. The almond lessees include Olam and Select Harvest, the latter being ASX-listed. And then some of our cattle lessees include JBS, who are Australia's largest processor of beef, and AACo, who is a listed cattle operator, and in fact have been listed for, I believe, over 100 years. Move on to the next page. So our leases have annual escalators embedded in those agreements, and the pie chart provides some description of the individual annual escalation mechanisms. The weighted average lease expiry is on the right-hand side. By virtue of our asset type, we tend to have a long weighted average lease expiry. And in fact, you'll notice that on the far right-hand side, one of our expiries is in FY63. And so that's a 40-year lease that we recently signed. Next page, please. I'm aware that people will have access to this presentation after its delivery, so I included a brief summary of our full year results included in this presentation, but I'll just call out that we have made forecast distributions of 11.7 cents per unit for FY24, and that represents approximately 6% distribution yield based on where RFF is currently trading. Next slide, thanks. I alluded to earlier macadamia developments as well as a macadamia lease, and this slide also provides some additional detail, not only on our thesis for investing in the macadamia sector, but the way that lease is structured, because it will be a driver of revenue growth for the Rural Funds Group. And there may be an understanding amongst the audience that there is a period of time between when you plant the tree and then you are harvesting crops. The way that Rural Funds Management strikes leases typically is that we're receiving rent on those development style assets from the moment they're leased rather than from when they're productive. And then as we spend capital to convert those farms to macadamia orchards, that capital expenditure also earns additional lease income. Next slide, thanks. I've included a slide on sustainability. It's definitely an area which is of importance to our investors and to us, given the nature particularly of the assets that we manage. And I've included some of the focus areas for Rural Funds Management, both from an environmental as well as a social perspective. But I would encourage anyone that is interested in reading more about our sustainability initiatives to refer to our recently released annual report, which contains additional information. So in conclusion on the the last slide of the presentation, what I've included is some images of the various sectors in which the Rural Funds Group owns and leases assets. And you'll notice some QR codes on each of those images. What we do is provide our investors access to what's happening on farm by way of reasonably regular video updates. And so those QR codes will take you to a video update on each of those respective sectors. In summary, the Rural Funds Group is an agricultural property trust. It has a long weighted average lease expiry. That lease expiry is underpinned by high quality lessees. And we have diversification by way of climatic zones, as well as by sector, as well as by property type. The Rural Funds Group is forecasting FY24 distributions of 11.7 cents. Distributions are paid quarterly. Thanks.
James, thank you for that. Okay, we've got a few questions. The first one, now you did sort of highlight that the group has 5 key commodity exposures, if I remember correctly. And the question is, can you give us a little bit of color on the outlook for those particular commodities that RFF is exposed to? So beef, almonds, macadamias, chickpeas, etc. So can you give us a sense for what that looks like going forward?
I absolutely can, Manny. One of the key points to note, however, though, is in the majority of instances, the rent that the Rural Funds Group received is not linked to commodity prices or the profitability of the underlying asset in a direct sense. And so therefore, where commodity prices will invariably go through cycles, in the majority of instances, that won't impact the Rural Funds Group's lease income. So we look for sectors where Australia has either a comparative or a competitive advantage. So in the case of horticulture, which is, for example, almonds or macadamias, and almonds particularly, Australia has what is a fairly rare, non-commonly held suite of climatic areas that are particularly well suited for growing almonds. And so as a consequence of that, the outlook for that sector in Australia is very good, because there's basically not a lot of areas in the country, in the world, in which are ideally suited to growing almonds. In addition to that, Australia has a very highly regulated border security system, and so that really underpins the viability of that sector. If I sort of transition now to another commodity type such as cropping, what we've seen is very high cotton prices. So our cropping properties are predominantly cotton. We've seen very high cotton prices. They have come back somewhat, but are still above their historically long-term average. In terms of beef production, that's a key sector. Australia, it's actually Australia's largest agricultural sector, and we're within the top handful of world exporters of beef as well. So that's a sector that has very sound long-term fundamentals.
Okay, great. I've got one question here around weather, actually. So obviously a lot's been talked about in the press already about the coming El Nino weather pattern. And the question is, how does RFF see the potential impacts of an El Nino weather event if it were to sort of, eventuate the way they're saying? I know that you mentioned you did diversify geographically, but a weather event of that size, are you diversified enough to cover yourself on that?
Well, I mentioned at the outset, Rural Funds Management has been in business for 25 years, and what that means is that we've managed assets through numerous weather cycles. And you might even recall the relatively recently millennium drought, and that's when we were managing a portfolio of almond orchards, some of which we still own. And so the access to water during those dry periods is something that's really embedded in the psychology of our funds management business. So very quickly, two sort of broad types of assets. You've got permanent plantings, so almonds, macadamias, vineyards. They require water every year. And so what Rural Funds Management does is buys sufficient water entitlements to ensure that those assets will have access to water based on the historic reliability of those water entitlements. Other type of assets is annual crops such as cotton or such as cattle properties. And we specifically target assets that are either in high rainfall zones or have access to an irrigation system whereby you can typically store water on your property as well.
Great. Okay, so it's safe to say that in terms of water supply, RFF is very well positioned to cope with that.
To what I sort of didn't tease out of the earlier asset composition is the water that's owned within the group. So we've got $1.8 billion worth of assets. $300 million worth of those assets are water entitlements.
Right. So the water rights themselves are an asset that is reflected in the balance sheet.
They're an asset owned within the group, that's correct. And then what we do in most instances is lease those out with the farms themselves. So where Olam is leasing an almond orchard from us, they're also leasing a certain amount of water per hectare as well.
Okay, great. I do have one question's come through just now. How much debt in the funds is there, and what are the rates to maturity of that debt?
We have 35.5% gearing as at our full year results. We have several facilities, if you will, with various maturity terms. One of those maturities is next year. So we will be going through a refinance process.
Okay. And actually, one more. You've got several acquisitions in the pipeline, I believe. Is the company balance sheet then sufficiently funded? You guys are comfortable, it is funded to deliver these and the other opportunities that you're looking at going forward?
The question may be referring to development commitments rather than acquisitions. So we're currently developing 3,000 hectares of macadamia orchards, which is leased out. It's underpinned by that 40-year lease that I mentioned. We're quite well advanced with that development, and the bulk of the CapEx requirement will be completed in the current financial year, so FY24. We're forecasting around $140 million worth of CapEx across the various sectors, but the bulk of it's for macadamias. Two things: one, it's fully funded; two, it earns extra income as it's deployed.
Great, thank you. Well, James, that was great. Thank you for your time today and for the presentation. And have a great weekend. We hope to see you back soon.
Thanks, Benny.